Hello traders, welcome back to my channel. It's me. Today, we are going to talk about something very interesting. The unseen battle that takes place in your trading every day. You may have heard of the term emotional intelligence. This is something that we often discuss with human beings. But what most people do not know is that this is also a major factor when it comes to AI-driven trading. Yes, believe it or not, there is an unseen battle that is taking place in your trading every day. And it is between your trading system, or more specifically the algo that you are using, and the market maker. In today's episode of Trader to Trader, I'll be breaking down what this unseen battle is all about. You will understand why sometimes, even if your analysis suggests a trade and you enter it, the trade goes against you. Why does this happen? Where are you making mistakes without even knowing it? So make sure you watch this episode till the end, so that you can learn what mistakes you might be making, how you can avoid them, and how you can become a successful trader. Alright, let's get started. If you are new here, then make sure you click on the subscribe button, because by doing so, you will become part of our community, where we share a lot of useful content that will help you to improve as a trader. If you are a subscriber already, then welcome back. We really appreciate your support, and if you are watching this episode, then please take some time out to like it, and make sure you comment below what topics would you like to learn about next. Alright, let's get started. Now, when we talk about emotional intelligence, we mean the ability of an algo to read and respond to emotions in the market. Believe it or not, this is actually a real thing. Every day there are millions of trades that are executed based on the emotions of the traders, and this is something that the market makers capitalize on. Have you ever heard of the saying that the trend is your friend? Well, this is actually true. The trend is your friend because it shows the collective emotion of the traders in the market. When the majority of traders are buying, the price goes up. When the majority of traders are selling, the price goes down. It's just like a pendulum that swings from one extreme to another. Now the question is, how does the market maker take advantage of this? Well, they do it by using an algo that is designed to detect changes in the emotion of the traders and respond accordingly. For example, if the price starts moving downwards, it means that the traders are starting to become bearish. At this point, the market maker can enter a buy order to take advantage of the situation. Similarly, if the price starts moving upwards, it means that the traders are becoming bullish at this point. The market maker can enter a sell order. Now, it may sound easy to beat the market by simply following the trend, but trust me, it's not as easy as it sounds. This is because the market is constantly changing, and the emotion of the traders is constantly shifting. What works today may not work tomorrow. This is where the battle between your algo and the market maker becomes crucial. Your trading system should be able to detect the changes in the market and respond accordingly. If your algo is slow or inefficient, then the market maker will beat you to the punch and execute the trade before you do. But if your algo is fast and efficient, then you may be able to get ahead of the market maker and execute your trade first. Trust me, it's a real thing. There are actually competitions held where algos are pitted against each other to see which one is the best. And believe me, the competition is fierce. These competitions are known as the Star Wars Weekends, and they attract participants from all over the world. The goal of these competitions is to create an algo that can generate the highest profits over a period of time. And the winners of these competitions are the ones whose algos are able to detect changes in the market and respond accordingly. Now, let's come back to the topic at hand. Your trading system should be designed in such a way that it is able to read the emotions of the traders in the market and respond accordingly. Here are some ways in which you can achieve that. Firstly, volume is a key indicator of the emotion of the traders. High volume usually indicates that the traders are excited and are willing to take risk. Low volume, on the other hand, indicates that the traders are bored and are not interested in taking risk. Secondly, another important indicator of the emotion of the traders is the momentum of the market. A strong momentum indicates that the traders are enthusiastic and are willing to follow the trend. A weak momentum, on the other hand, indicates that the traders are uncertain and are not willing to follow the trend. Finally, another important indicator of the emotion of the traders is the volatility of the market. High volatility indicates that the traders are nervous and are willing to trade cautiously. Low volatility, on the other hand, indicates that the traders are relaxed and are willing to take risk. By using these indicators, your trading system should be able to detect the emotion of the traders in the market and respond accordingly. However, keep in mind that this is not an exact science, and there will be times when your algo will make mistakes. That is why it is important to have a robust risk management system in place so that you can limit your losses. Now the question is, how can you design an effective trading system that takes into account the emotions of the traders? Well, that is not an easy question to answer. It requires a lot of experience and expertise. But if you want to learn more about it, then I would suggest you to watch some videos on YouTube. There are some great channels that talk about this topic in detail. Also, if you want to learn more about algorithmic trading, then I would suggest you to check out our website. We have some great courses that will teach you everything you need to know about algorithmic trading. Right, now let's move on to the next point. Another mistake that traders make is not keeping up with the latest trends in technology. The world of trading is constantly changing and evolving, and it is important to keep up with the latest trends in technology. New technologies such as artificial intelligence and machine learning are transforming the way trading is done, and it is important to embrace these technologies to stay ahead of the curve. Many traders make the mistake of sticking to traditional methods and strategies, and they fail to see the benefits of new technologies. They fail to use AI and machine learning to improve their trading. In addition to keeping up with the latest trends in technology, it is also important for traders to continuously improve their skills and knowledge. This can be done by attending seminars, webinars, and workshops. By staying updated with the latest trends and best practices in the industry, traders can improve their efficiency and effectiveness, and ultimately, their profitability. Moreover, traders should also keep in mind that it is important to be flexible and adaptable. The trading industry is highly dynamic, and traders must be willing to change their strategies and tactics as needed. They must be able to adapt to new market conditions and be open to learning new things. Finally, it is important for traders to remember that they are not alone in this battle. There are many resources available to help them succeed. They can reach out to mentors, coaches, and other traders for guidance and support. By working together and sharing knowledge and best practices, traders can increase their chances of success in this highly competitive field. That's it for today's episode of Trader to Trader. Hope you enjoyed it and learned something new. Remember, the battle between your trading system and the market maker is real, and it's crucial to keep up with the latest trends in technology and continuously improve your skills and knowledge. So keep learning and keep practicing, and you will eventually succeed. If you liked this episode, don't forget to hit the like button and share it with your friends. Subscribe to our channel for more insightful episodes. And finally, thank you for watching. We'll see you in the next one.